In today's video, we shall be looking at RSI Divergence. RSI Divergence is a great tool that can keep you in consistent profit when you use it properly. It has 90 to 95% chances of succeeding. So pay attention to this video and you'll be glad you did. So what is a divergence? A divergence is when the price action is moving contrary or in opposite direction to an indicator. When price action is moving contrary or in opposite direction to an indicator, we say that there is a divergence. And our indicator in this case is RSI, which stands for Relative Strength Index. So when the price action is moving contrary to the relative strength index, we say that there is a divergence. We have two categories of divergence. Number one, the regular divergence, and number two, the hidden divergence. The regular divergence signals a reversal in the major trend. If the major trend is a bearish trend and you observe a regular divergence, then you should be expecting the price to reverse from being bearish to becoming bullish. The hidden divergence signals a continuation in a major trend. There is, if you're in an upward trend and you observe a hidden divergence, then you are expecting the continuation of that upward trend. If you are in a downward trend and you observe a hidden divergence, then you are expecting a continuation of that bearish trend. So there are two types in each of these categories. We have the bullish regular divergence and the bearish regular divergence. While in the hidden divergence category, we have the bullish hidden divergence and the bearish hidden divergence. So I will take each of them one after the other to explain. Now, in the bearish regular divergence, the price action is marked with higher highs and higher lows. However, in the RSI, you may be observing the higher highs and higher lows, but at a point, the RSI, instead of making a higher high, will begin to make a lower high. Wherever you observe the price action making a higher high and the RSI making a lower high, there is a contradiction. As a result, we say that there is a divergence there. So look for a bearish confirmation, then you short the trade with at least 1:2 risk-reward ratio. So let's go to the second type of a regular divergence, which is a bullish regular divergence. A bullish regular divergence occurs after a downward trend. So when you're having a downward trend and the price action is making lower lows and lower highs, the RSI also is making lower lows and lower highs. However, it gets to a point where the price action continues to make a lower low, but the RSI, instead of making a lower low, will be making a higher low. There is no longer strength in the side of the bears. At that point, the RSI is doing something contrary to what the price action is doing. There is a divergence. So when you observe such a divergence, look for a confirmation, a bullish confirmation, and long the trade. Take a buy. So that is for regular divergence. Now let's get to the hidden divergence category. You know that price doesn't just move in a straight line. Price moves up and retraces a little or rallies a little depending on the side of the market you were. So whenever you observe price action in an upward trend, making a higher low and the RSI making a lower low, then there is a divergence. It's a signal of a continuation in that upward trend. So you should look for a bullish confirmation and long the trade from the point it has retraced. This is what we call a bullish hidden divergence. Let's look at the bearish hidden divergence. The bearish hidden divergence occurs in a downward trend. It signals a continuation of the downward trend. In a downward trend, you observe price making a lower high, lower high, lower high. RSI also makes lower high, lower high, lower high. However, it gets to a point where the price action continues to make lower high, but the RSI is making a higher high. When the RSI is making a higher high and the price action is making a lower high, there is a divergence there. As a result, you begin to look for a bearish signal, a candlestick pattern whatsoever that will give you the signal to short the trade at that point in time. So these are the divergence that we have, the regular divergence and the hidden divergence. So we go into our charts to identify them and see how to trade them. So this is AUD/CHF for our time frame chart, and I want to demonstrate the hidden bullish divergence in this chart. Here is an upward trend. However, there is a recent retracement. Why the price was making a higher low? Let's see. Putting our trend line. Why the price is making a higher low? Look at what the RSI is doing at the same time. Here is the RSI at that same time making a lower low. This low is lower than this, but in the price action, this low, this present low, is higher than this. So that is a signal that there is going to be a continuation in this price move. So looking at this point, we can see a bullish engulfing candle, and you can also add a trend line to help you see where there is a break so that you can trade. Here is a trend line connecting the highs. So with this trend line has been broken and we are in this market. So if you are trading this market, if you place a buy here, you can just put your stop loss just below this recent low, and you will target 2 times of that or more. That is 2 times of the distance of your stop or more. So this is how you identify a bullish hidden divergence, and you can see the price is already moving up. This is AUD/JPY 1 hour time frame chart. This is an upward trend. We're seeing price making higher highs here, higher highs, higher highs. So we want to connect those higher highs. While this price is making higher high, let's look at the RSI and see what the RSI is doing. The RSI is rather making lower highs. A lower high here, a lower high here, lower high here, lower high here. It's making lower highs. So I connect this. Look at it. So we're having this higher low. So the next thing I need to look out for is a price rejection. So there is a price rejection here with a shooting star, and with that shooting star I can go short and put my stop loss just above the shooting star, some pips above the shooting star, or put my take profit at the ratio of 1:2. So let's see, if I had entered the market at that point, what the price would have done. So here is it. The price was actually moving down. The price moved down and it hits the take profit. This is gold 1 hour time frame. Price is in a downward trend, making lower lows, and lower highs. While the RSI towards this point here, we're having price making lower low, a lower low at this point, but the RSI at this same point is making a higher low. So let's connect these two and see what happens from there. This is price making lower low, while RSI is making a higher low. At this point, you need to watch for a price rejection, and we can see that there was a very strong price rejection with this candle. There's a very strong price rejection. So let's see how it unfolded after that. You can see price got to that point. The price was able to hit our target at 1943. So that's how you trade divergence and you make some money.